The sell-off we're seeing today in big tech and elsewhere. Ed Yardeni, president of Yardeni Research. He joins us now on the phone. Welcome back, Ed.
Thank you very much.
What do you make of the action in the market?
Well, to tell you the truth, I kind of welcome it. I would have been more concerned if the market had kept melting up. The market hit an all-time high back on September 2nd, and I was kind of rooting for the market to move sideways for a while so that earnings had some time to catch up, and I think that's exactly what's happening here. Now, the correction since September 2nd really started September 3rd, I think could end November 3rd if, in fact, we know who the president is by the end of the evening, or a few days after, whenever we know. And we're also going to know who's got a majority in the House and the Senate. So I think some of this started out as an overvaluation correction in the technology sector that's probably continuing through today. But a lot of it was also election jitters. And then, of course, the virus wave has picked up here. And, Scott, you know, Wall Street's been saying, and I've been sort of saying the same thing, that the market is going to go up no matter who wins. But maybe the market's starting to think that, you know, if Biden wins and he raises taxes, all right, he'll increase spending, so it shouldn't be bad for the market. But the real issue now for the market is how will either a Trump or a Biden respond to a pickup in this virus pandemic, depending on, you know, what the experts say.
Maybe the biggest issue, though, right now for the market, though, is not the election, it's not that, it's not taxes, it's not spending, It's tech. If big tech needs to come down more, isn't the market itself going to have a problem? I mean, you do have some like David Einhorn suggesting that tech is in an enormous bubble, and September 2nd was the top, and it's already popped, and we're witnessing the way that some of these stocks are trading, Apple and others, and Apple's in a bear market, as we said, and some think it has further to go to the downside. What do you think?
Well, I think they obviously, with the benefit of hindsight, they were expensive, and now they're less expensive. But I think we're still looking at zero interest rates for the foreseeable future. I mean, no matter what happens in Washington on November 3rd, Jerome Powell's still going to be Fed chair, and interest rates are still going to be near zero. And even if we start to see the bond yield moving back up over 1%, I think the Fed's going to come in and peg the bond yield. So I think it's going to be pretty hard for anybody to really be out of the market for very long, or at least not jump at opportunities. And I view this more as an opportunity than a reason to panic. I don't agree that this is a bubble. Technology's got a great future over the rest of the decade.